Good morning, everybody, and good afternoon to those joining us from Japan. Welcome to our webcast on German transfer pricing update for Japanese companies. This series of webcasts is focused on how taxpayers can manage their tax audit disputes and explore controversy management tools to effectively manage double taxation and their tax obligations. Series 1 of this webcast, which is a series you are listening to now today, will focus on tax audit trends and joint tax audit as a controversy management tool. Our second series, which will be held in May, will focus on mutual agreement procedure and advanced pricing agreements. So in order for having a good controversy management for companies, it is paramount to have the two sides of the transactions involved. And therefore, today, our webcast will include not only, let's say, the German perspective of things, but also the Japanese perspective. This will give you a good view on how Japanese headquarters and how Japanese subsidiaries or their subsidiaries approach certain controversy matters. My name is Andres Pelaez. I'm a transfer pricing director in our Düsseldorf office. I am part of our Deloitte Japanese service group and leading our Japanese competence grid here at our transfer pricing practice. With me today is my colleague Markus Kirche, our TP partner based in Frankfurt. So good morning to you, Markus.
Good morning, Andres, and good morning to everybody. Yeah, thanks for the introduction. My name, as Andres has already mentioned, is Markus Kirche. I'm in transfer pricing now for a bit more than 25 years. And since then, active in the Japanese-German corridor, helping Japanese multinationals, also traveling every now and then to Japan, and happy to co-host the session today.
Thank you. Furthermore, we have our colleague Joe Kumagai. He is a senior manager in our Düsseldorf office who will be summarizing the main topics of our discussion today in Japanese. Good morning, Joe.
Good morning. Thank you for the introduction, and good morning, everyone. So my name is Joe Kumagai, and the senior manager at the Düsseldorf office-based Japanese coordinator, and I worked for Deloitte for 10 years, over 10 years. So nice to see you.
Good to see you. Last but not least, and as mentioned, today we will have also angle from a Japanese perspective, what's happening in Japan from a transfer pricing point of view. We have our special guest today joining from Deloitte Japan, Mai Ebata, who will be discussing the tax matters from a Japanese perspective. Good afternoon to you, Mai.
Thank you for the introduction, Andres. Good morning, everyone. Good afternoon, everyone. Those from who are joining from Japan. I am Mai Ebata, a senior manager at Deloitte Japan. I also used to work at the Deloitte Germany office for a few years until 2022, assisting Japanese headquartered companies.
Very good. Thank you, Mai, for the introduction. As we can see in the next slide, I would also just briefly like to introduce our Japanese service group. So this group is actually supporting our endeavors as well from a tax perspective, and this large community that we have in Deloitte of Japanese speaking specialists was established in 1975, and we have a large community of over 1,400 Japanese speaking professionals in around about 32 countries, supporting all aspects of a business, including, of course, a dedicated tax team, which you can see below, which includes bilingual professionals together with experienced subject matter experts. So let's jump into the agenda on the next slide, just to give you a very brief overview of what we will be discussing today. We will be looking at the regulatory developments that have occurred, let's say, in the last 1 or 2 years, including the new documentation rules, tax audit procedures, and then we will be discussing a bit about joint tax audit as a controversy management tool. And finally, we will be discussing the recent trends in transfer pricing from a Japanese perspective. We will be presenting the topics as mentioned in English, which will then be followed by a Japanese translation on the main points discussed. And maybe just some housekeeping items before we start. This webcast will be recorded. Also, in case you would like to raise a question during the presentation, feel free to do so in the query in the question box. And we will follow up to your question during the webcast if time permits. If not, we will then follow up shortly by email afterwards. So let's get started. So the next slide, we will start with the recent regulatory developments, which you can see in the further slide in the next graph. So the first change, let's say recent change, is in relation to the administrative principles in Germany. So maybe just to give you a bit background, the administrative principles in Germany are not binding to the taxpayers, but are binding to the tax authorities. However, it does give taxpayers a very good indication of how tax authorities will approach tax audits and, let's say, the tools and mechanisms and argumentations that they will be using during a transfer pricing tax audit. So it's a very important regulation that we are constantly monitoring. So the main, let's say, change that we see in the recent administrative principles is related to the financial transactions. So basically, the taxpayers, or let's say the financial transactions, stipulate now that in order to determine the arm's length principle of a intercompany loan, it will need to determine, let's say, the business purpose test associated to the loan, and it would also need to be determined if the taxpayer is able to pay that loan throughout a period of time. And apologies, I have started a little bit below in the slide, so we're looking first at the administrative principles. So this is basically the debt capacity and business purpose test that I was just mentioning. So my experience has been in the past that most Japanese companies have generally focused more on analyzing other type of intercompany transactions and not so much focus on the financial transactions. So this is obviously a very important change that we see in the administrative principles. And let's say before you will be engaged in a new financing transaction, it will be important for you to consider these matters. And of course, the burden of documentation is also increased in this case because you will not only need to determine the arm's length, let's say, if your interest rate would be at arm's length, but also you would need to create this debt capacity and business purpose test as part of your documentation. Another part of the regulation stipulates the financing relationships for low value-added functions. So in case a company, for example, has a treasury finance activity, this normally would be considered a cost-plus activity unless it can be demonstrated that these activities actually inquire or have more risks associated to that sort of treasury activity. So it is actually the first assumption that this treasury activity is basically a low value added service and it should be remunerated only on a cost plus basis. So it will be important again to make sure that if you have any sort of treasury function or any financing function, that this is appropriately documented and also clearly remunerated. Another change in the administrative principles is the application of Amount B into the regulations. You are probably already familiar with Amount B, but if you have not heard that, this is sort of a way that the OECD is trying to, let's say, reduce the burden of doing benchmarks and instead focus on having a very fixed, or let's say a metric, so to say, where it stipulates what fixed remuneration each company should have based on their industry and other factors. The German regulations have adapted Amount B, but only for, let's say, covered jurisdictions. So that is jurisdictions that specifically appear in the OECD as covered jurisdictions, and also includes countries with whom Germany has an ongoing double tax treaty. So this would not apply to Japan because Japan is not included as a covered jurisdiction in the list of the OECD, but it does cover, let's say, other countries, namely outside of the EU. that would need to be considered, of course, if there is a double tax treaty also in place. Another change that we have seen is more on the top part of your screen, which is the German tax code, section 90, sentence 3, where there we have seen that the deadline for submitting documentation has decreased. So normally as of or let's say before this rules kicked in, documentation needed to be submitted earlier, or let's say on a 60-day for ordinary documentation and 30-day for extraordinary documentation upon request of the tax auditor. But what has happened now as a result of this change, the deadline, or let's say the starting point of when the time starts or the clock starts ticking, let's say, is when the tax audit has been announced. And after the announcement of the tax audit, the taxpayer has 30 days to submit the so-called transaction matrix, the master file in case for companies that have a revenue exceeding 100 million, and also the extraordinary documentation. For the ordinary documentation, now the days have been reduced to 30 days, but only upon specific request of the auditor. So we have, let's say, a broadening of the days that need to be submitted. These documents need to be submitted, and also the time at which that starts. And then maybe just on the transaction matrix, because that is also something, let's say, relatively new. The transaction matrix is basically, it's a table where you need to provide different information, and this is, let's say, very familiar to the transaction volumes that you normally have in your documentation, but there is some important differences. So there we can see that in the top right-hand side, you would need to include the subject matter and nature of the transactions, the party involved in the transactions, the volume of the remunerations, the contractual basis. You will need to also determine the transfer pricing method applied, the tax jurisdictions involved in the transaction, and then lastly, whether the transaction is standard to or let's say this, if it's subject to a standard taxation or not, which basically means in case you have a transaction that is subject to any specific tax regime in a jurisdiction, like an IP box regime or so forth. So this would have to then be submitted, as mentioned, 30 days after the announcement of the tax audit. So there we have seen, as mentioned, then a strengthening of the rules for documentation purposes. And if we can go to the next slide, please. Yeah, here in the upper part of your page, you basically see the implementation of the EU directive, so-called DACH 7, which is, as you know, the EU directive is basically the EU allowing then countries, or implemented by the EU, but it's not really implemented directly into local law. And the local countries then have to specifically implement this into their local regulation as they see fit. And this directive specifically aims to modernizing the tax law and tax audit procedures. And part of this, as mentioned, was the reduction of submitting records 30 days upon notification of the tax audit. So these are the documents that we kind of mentioned in the last slide. So the transaction matrix, the master file, and the extraordinary documentation. And I think most important here is that tax authorities can request this documentation at any time. So that means any time outside of a external tax audit. And important as well, as part of this, let's say, regulation, we have penalties imposed for the non-completion or the non-submission of these records. So now, in case these records are not submitted in time, taxpayers will have to pay a specific penalty in case that is not submitted in due time. And on the bottom part, we have very briefly the public CBCR. Most of you have probably already heard this before. So the public CBCR is different than the normal CBCR report you do at a global level. So The difference is that the public CBCR requires multinationals to disclose certain financial data to the general public in the EU. This also applies to in-scope Japanese multinationals operating in Germany. Germany introduced these rules in June 19, 2023, and the legislation requires in-scope M&Es to report this data publicly for fiscal years starting June 22, 24 or after June 22, 24. So for most Japanese companies who have fiscal year end in March, this would include their fiscal year starting April 1st, 2025 and ending 2026. And thereafter, the taxpayers would still have 12 months after that year end to submit that public information in one official EU register and on one internet website. So now companies, of course, will have to select which country in the EU will, let's say, be doing this sort of will be officially putting this information in the EU register in the website. And M&Es are free to pick the most favorable EU member state to disclose this. Germany is an attractive hub for disclosing such EU data, since Germany has certain elements like the website exemption and safeguard clause, which avoids full second disclosure of the data on one internet website. So very important to keep this in mind going forward. There is still some time, obviously, but it's nonetheless important for Japanese companies to keep this in mind for the future. Going on to the next slide. Yeah, so here we have a very brief overview of the main topics that are currently discussed in German tax audit and what we have seen, let's say, when looking at tax audit for Japanese subsidiaries operating in Germany. So as we see, the main topic that we have seen in tax audit is restructuring, so exit tax. So the exit tax rules in Germany have been available since 2008, and since then they have gradually strengthened and tightened, unfortunately, for taxpayers. And the recent regulations, we have also seen that certain, let's say, partial transfer of functions, assets, or risk or opportunities can fall within these regulations, including, for example, potential partial transfer of any, let's say, activity, function, and risk. And from that perspective, we have seen in most tax audits that in case there's something moving out of Germany, there needs to be a proper documentation, also a specific valuation for the exit tax. So the German regulations do stipulate that in order to determine the exit tax, you have to look at the let's say, valuation not only from the seller perspective, so the entity selling or transferring the activity, but also from the other side, from a buyer perspective. So it's a two-sided approach, which requires, in most cases, a valuation. And it's, let's say, not a straightforward exercise. And therefore, in case there's any sort of activity that taxpayers are currently, or restructuring that taxpayers are currently undergoing, it is worth checking if this would fall within the restructuring rules. And then as we see here in point 2 and 3, there has been also quite a strong focus on companies that have perpetual losses. And I would say not only perpetual losses, but also losses that occur in one single year. You know, taxpayers in the past have looked at normally the tax periods cover three years, and the documentations also normally cover those 3 years. But now tax authorities are also looking at quite individual years to see if there's any losses and inquiring on the reason for those losses. So taxpayers need to provide a very robust, I would say, documentation in order to make sure that these losses are clearly determined. And what we have seen in tax audits, and we will have a case study afterwards specifically on this, is that tax auditors, when they see a loss in Germany and there's an explanation as to why this loss occurred because of an extraordinary event like a COVID pandemic, for example, the tax authorities normally try to understand how Japan contributed to this sort of extraordinary event. And in that case, it's important to make sure that this is clearly documented and determine, you know, when you have such events, to see if it's possible, to what extent Germany should bear the full responsibility of that extraordinary cost, or in what way that should be shared with its headquarters. And on the right-hand side, we see the topics on financial transactions. As I mentioned, this is also a topic that's picking up slowly. And as we have seen also by the strengthening of the rules on the debt capacity test, it will be something that will pop up more and more in tax audits. And we have also seen that gradually picking up. In terms of secondments, historically, there was a focus of the German tax authority on secondments. And then, at least from my perspective and the clients that I've been dealing with, there was a bit pause on sort of that tackling on secondments, and the focus was more on transfer pricing. However, recently, because of the new letter of the Federal Tax Office on secondments, which also mentions about the arm's length principle around secondments, tax authorities have started also slowly to pick this up. And I guess important is to mention that even though the tax auditor accepts a taxpayer's transfer pricing position, the remuneration of a seconded personnel may still be challenged. And this is also normally seen in cases when a company is making losses. Let's say if you look at your typical routine distributor, companies try to also understand if the secondment expenses are arm's length. This is something very difficult to prove, but normally that's something that they also challenge or question when they see losses in a specific routine company, especially. So if we go to the next slide, here we have a polling question to our audience. And if you could kindly vote, what has been your experience during tax audit? What type of transactions have been addressed to your tax audits in Germany? A, intragroup financial transactions. B, extraordinary business transactions, sort of relocation of functions. 3, intellectual property or so-called IP, like trademark, trade name, transfer of a customer base. And then we have profitability of the specific activities, such as manufacturing or distribution. And then last but not least, we have intragroup service charges. So if you could kindly vote based on your experience. And I guess in the meantime, as we wait, Marcus, would you have anything to add in relation to the experience on tax audits that we discussed in the previous slide?
Yeah, thank you, Andres. I think, yes, the topics which are here on the table are really the key topics I currently see in a lot of tax audits. So very detailed questions on intragroup finance and transactions, which at first glance do appear, let's say, normal. Tax auditors look into that in very detail. And of course, a very hot topic is the relocation of functions. So tax auditors tend to look into changes in inventories or other changes in the balance sheet, changes in personnel, in the organizational structure, to understand whether anything of importance has happened, and then ask questions in that direction.
Yeah. Perfect. So if we can see the answers of our audience. Okay, so we see that the majority has been dealing with intragroup service charges. So that's also not a surprise. That's indeed something that we also see in tax audits and intragroup financial transactions. That's also interesting to see that a good part of our audience has also started to see topics related to financial transactions. And I guess the other 3 are pretty much tied: extraordinary business transactions, IP, and profitability of specific activities. Perfect. Thank you very much for your answers. Now I will pass it over to Joe, who will summarize in Japanese the main topics that I have recently addressed. Joe, over to you.
イキャンドレス。皆様、改めまして、本日は貴重なお時間をいただきましてありがとうございます。デロイト・デュッセルドルフの駐在員の熊谷と申します。ここから、今までの、スライドを日本語訳をベースに、キーポイントを解説させていただきます。まず今、投影しているスライドの一番上の矢印、委託文書として今太字となっている取引マトリックスという文書の運用が、今年より、開始されています。以前から自主的に対応されていた法人様もいらっしゃるかと思いますけれども、この度、スライド右上にレックされているような基礎的な情報というところが改めて制度として求められることとなりました。 次に、大事な点として、中腹赤いところの、三角で、ハイライトしておりますけれども、税務調査等で、要請された資料の提出期限が60日から30日に短縮されているというところで、ご存知の方も多いかと思いますけれども、今年1月1日から、適用開始されているというところですので、今後時間軸に十分注意の上、税務調査対応を進めることが、可能になっているかと思われます。で、次に真ん中の矢印、意見確認にかかる行政ガイダンスというところが、更新されておりまして、特にハイライトすべき点としましては、一つ目の、こちらのグループ内金取引というところとアマウント B 制度の開始というところになります。で、まず一つ目、グループ内金取引につきまして、先ほどもご説明になった通り、債務返済能力だったり、事業目的、信用力というところを勘案した上で、利息水準というところを決定するというところが、求められることとなりました。なので、今後ですね、利息水準の妥当性というところで、以前よりまして、厳密に、調査というところが、される可能性がございますので、改正内容に即した対応というところと文書化というところが、今後、可能になってくるかなというところでございます。次に、利益 B というところに呼ばれますけれども、アマウント B 制度というところで、概念としましては基礎的な販売、マーケティング活動にかかる利益水準をですね、あらかじめ、決定する新しいルールというところで、税務執行の、合理化、簡素化というところが目的となっている制度となります。で、先ほどもご説明の通り、アマウント B 制度はですね、各国でニートになっていて、現地で多く導入している国はないというところではあるけれども、今後ですね、税務執行能力が限定的な国だったり、地域というところでカバードジュリスディクションと呼ばれますけれども、その間との取引においてはですね、アマウント B アプローチの結果というところが、尊重される可能性がございますので、留意が必要と考えられます。で、最後に、3つ目の矢印ですね。DAC7 というところで行政協力に、関する指令というところが、改正されておりまして、税務調査官が、随時資料の提出を要請できることになっているというところでございます。なので、今後ですね、この改正を受けて、罰則の適用が、罰則の適用がされるケースが、増えるという可能性がございますので、当該改正内容というところをしっかりと理解した上で、今後、税務調査に臨むということが、重要になるかと思われます。ですね、スライド。続きまして、こちらのスライドではですね、ドイツにおいて、今後対応が求められるパブリックシビシャル制度というところで概要を簡単に、ご説明させていただきます。まず、パブリックシビシャル制度というところで、シビシャル情報ですね、一定の財務情報というところを、一般公開が求められる制度というところになっております。で、連結収益7億5千万ユーロというところで、現在のレートで1200億円程度というところが適用のトリガーとなってきます。通常のCBCR の提出義務があるような企業様については一般的に対象のスコープに入ってくるかなというところでございます。ただですね、ドイツの制度上、3月決算の場合は2026年3月期が対象初年度というところになりますので、パブリック CBCR の対応期限も一般的には12ヶ月後というところで2027年3月末になってくるかと思われます。納税者はですね、公開する国を EU 加盟国内から選ぶことができるというところで、またドイツはですね、先ほどもあったように、ウェブサイト上の公開義務、免除規定というところが設けられていますので、そのパブリック CBCR の公開時としてですね、ドイツというところは魅力的な、納税者にとって魅力的な選択肢の一つになり得るかと思われます。Please go next slide. 続きまして、こちらのスライドではですね、最近の、税務調査のトレンドとして、特に、左側のですね、特に、事業再編、連続赤字、特殊な状況について、お伝えさせていただければと思います。まず一つ目の事業再編についてなんですけれども、2008年の、機能移転課税というところが導入されて以降ですね、事業再編というところは引き続き、注目を集めているトピックというところになります。で2年前の2023年6月というところで新たなガイダンスというところが公表されておりまして、機能移転が生じたと判断され得るケースがですね、増加することとなっております。なので、事業再編ですね、行う際にはですね、より最新のガイダンスだったり、かかる価値評価というところについて、十分な留意が必要になってくるかと思われます。はい。次に2つ目の連続赤字というところについて、こちらも引き続き注目を集めているトピックというところで、機能が限定的なルーティン基準については、より留意が必要な論点となります。で、ドイツはですね、3年経ったら、黒字化すべきというような、概念が根底というところにありますので、連続して営業損失が発生しているというような場合には、その法人に帰属すべき一定の利益が帰属しているかというところの検討だったり、損失が発生した原因だったり、損失解消のための措置というところの具体的な対応が必要になってくることになります。で、3つ目の、特殊な、状況というところで、こちら、COVID-19 だったり、ロシアのウクライナ侵攻というところの特殊要因 についてですね、経営成績の悪化があった場合ですね、その因果関係の特定というところが、求められることとなります。で、ドイツに関しましては、古い、オープンイヤーというところから調査対象年度というところが、設定されることになりますので、特にコロナ禍がですね、始まった2020年頃というところが今後、調査対象年度に入ってくるというところが、想定されます。ですので、来たる税務調査に備えてですね、経営成績の悪化というところが、あった場合にはですね、その特徴因と、経営成績の悪化というところの因果関係をしっかり証明できるように、準備しておくことが、鍵になってくるというところでございます。で、少し駆け足になってしまったんですけども、ここで、日本語のサマリーというところは一旦以上とさせていただきます。次に、ドイツでの税務調査の実施概要の説明に移らせていただければと思います。Max, now my Japanese part has been ended, so hand it over to you.
Thank you very much, Joe. And let us now take a look on how the tax audit activity developed over the last years in Germany. So, if we look at the last 4 years and at the average audit rate in 2023, the number of businesses audited of the total businesses is just 1.7%. Which might appear quite low, but if we look then at the size clusters used by the German tax authorities to select businesses for tax audit, we see that the large businesses to which most of the subsidiaries of Japanese groups belong are audited by 17.8%, which is 10 times higher than if we look at the total of all the companies. So that means that large businesses are very much probably audited, and that's also our experience. So typically you see large businesses audited for all years consecutively. Typically in Germany, you have this 3 to 4 years term for a tax audit. So every 3 to 4 years, then often a tax audit is coming. That will change in the future. So tax audit cycles will become shorter due to the procedural law changes that Andres has explained earlier. And if we look at the financial results of audits for 2023, it's again the large businesses which contribute most, which means that the adjustments in tax audits for large businesses was of course the most significant part with almost 80% in total. And the two most important topics in this regard, which leads to the highest adjustment amounts, is VAT and transfer pricing. So transfer pricing is on the agenda of every tax audit when we have cross-border transactions. And the German tax authorities, based on the changes discussed, will now use the transaction matrix mentioned by Andres to have more focused audits. That's what they told us, so that at the beginning of a tax audit will take a look, what are the transactions, the most important transactions? Are there, for example, financial transactions we have mentioned, and then start the tax audit in a more structured way than in the past. And we've also seen transaction matrices requested from taxpayers even before tax audit started in order to select companies for tax audits. And what we also see as a trend is if there are several subsidiaries of a group in Germany, that there are more coordinated audits. In the past, it was typically more company by company audit, but now there are more exchanges between the competent tax auditors to also see that the same topics are audited. And this is, of course, then also, let's say, increasing the examination level to some extent. And while the audit activity has slowed down a bit during the COVID years. We expect that it has taken up again, and we expect it to grow further now in the next years. So let us take on a view on a typical example of a tax audit situation on the next slide. A situation in which a German taxpayer must decide on how to deal with a certain setup in a tax audit situation. So in the case study, it's a very typical example of a German subsidiary of a Japanese group. There has been a tax audit ongoing for 3 years, and the German subsidiary is characterized as a routine distributor, which means a stable profit is expected by the tax authorities. If we look at the profitability, the operating margin of the company was below the interquarter range of a benchmarking study in 1 year. And based on the German law, this gives the possibility to the German tax authorities to adjust the profit not only to the lower quarter, but to the median. And which means that, of course, that's a higher adjustment, a lot higher adjustment typically than if it would only be an adjustment to the lower quarter of a comparable range. But what we see then often in a tax audit situation is that because there are, of course, sometimes arguments for the taxpayer and against the taxpayer why a profitability in a certain year is not that positive. Also, one could argue with a multi-year perspective. Then often we see that the tax authorities are offering a compromise in order to finalize a tax audit. But that compromise, which means granting a more favorable outcome of the tax audit. So in this case here, an adjustment only to the lower quartile is then often combined with the condition that the taxpayer will not enter into a mutual agreement procedure, which means that it, at least from a German perspective, finally accepts double taxation. And if we look here into the situation in Japan, in our case study, the tax returns have already been filed in Japan. So the question really is, how should the taxpayer react in that situation? Because from a pure German perspective, that flexible adjustment, that offer from the tax authorities is beneficial. Yeah. The adjustment is lower than if they would adjust to the median. Also, often this offer is combined with letting drop penalties or withholding tax, so additional tax and cash effects would then also be avoided. But from a Japanese perspective, the taxpayer in Japan has already paid tax on this specific income, which the German tax authorities want to tax here. So the question is how to avoid double taxation here in this setting. And one important question to ask in that situation is there any possibility to have kind of a corresponding adjustment on the Japanese side, which would then avoid that the same income is taxed also in Japan? And maybe this question goes out to you. Is there a possibility?
Thank you, Marcus. The short answer would be, unfortunately, no. The Japanese tax authorities would not accept such corresponding adjustment. And what they would accept, the only way they may agree to such a corresponding adjustment is by holding a discussion or a negotiation with the German authorities, which is a mechanism you just mentioned called a mutual agreement procedure. So back to you, Marcus.
Thank you very much, May. Yeah.
Sorry, if I may just ask a brief question, May, regarding this, maybe for most of the German subsidiaries here in Germany, just to understand from a Japanese perspective. So I understand that the tax returns in Japan are filed quite quickly. I think it's a period of 3 to 5 months, but just wondered if you could just briefly let our audience know what sort of that time frame is for filing a tax return, because I think that's really the point where it is clear that doing anything in Japan will be difficult, especially if you have this short time frame of filing a tax return after the fiscal year end.
Right. Generally, so the tax return filing deadline is 2 months to say 3-4 months after the end of the year. So it will be closed quite soon compared to Germany in Japan.
Okay, perfect. Thank you, Mike.
Yeah, and that's really, let's say, a time frame which is not helpful because, I mean, in Germany we are still lagging behind in tax audits. That will speed up a bit, but I think the situation that we are so close to the end of the financial year that we will be in the position to have a counter adjustment on the Japanese side before filing of tax return is not a realistic scenario. And while one could, of course, question here the approach of the German tax authorities that they offer this more beneficial outcome by asking for not going into a mutual agreement procedure, and question that from a legal perspective, it is the experience that if you really would go after such a compromise into mutual agreement procedures, that would not be taken as a very friendly act, so to say, and would worsen the relationship with the German tax authorities. So these situations should be very well thought through, whether it is makes sense to accept the offer. Sometimes it is because of some reasons like cash flow or others. And sometimes it's the better option to go to mutual agreement procedure and then only be taxed once. But there's also, let's say, one additional tool which we have in Germany and in Europe a lot nowadays, not a lot possibly, but increasingly, which is called joint tax audit. And with that, I would like to go to the next slide. Where we have prepared a short polling, or second polling. And the question would be, have you ever experienced joint tax audits between Germany and Japan, between Germany and other countries? Have you heard about joint tax audits or not? It would be interesting to see a bit what is your experience level here. I'm curious to see the results. I don't know whether we're already there. Yeah, that would be my expectation, especially the first. If we would have had a yes in the first answer, I would have been surprised because, to my knowledge, that has no joint tax audit has just taken a place between Germany and Japan. But let us take a closer look. What is really a joint tax audit at all, and how does that work? So a joint tax audit is a coordinated either bilateral or multilateral tax audit in which the tax authorities from different countries are auditing the same taxpayer together. So that's also the real difference from vis-a-vis a simultaneous tax audit, where the two tax authorities are auditing separately, but are exchanging information on their audits. So joint tax audit is really a common procedure where the tax authorities are working together. Durations are varying, but it's often taking less than a year, which is less than a typical German tax audit on a standalone basis often. And this means that it's a very efficient procedure. And but what are the requirements to go into a joint tax audit? Is of course to have overlapping tax audit periods, which is often a problem because Germany in the past has been lagging behind. As we have said, they're getting closer, so it's getting easier. And joint tax audits are especially a more common tool within Europe. Why is that so? Because there's a European directive, which is the legal basis, and Germany has implemented the directive, also the other EU members. So there's a legal basis for that within Europe, and that's also where we see most of the cases. But there is also the possibility to do a joint tax audit based on the double tax treaty. If you have a clause in the double tax treaty that is allowing the exchange of information, and or there's also countries which have signed the Convention on Mutual Administrative Assistance in tax matters, and that gives also the possibility to do joint tax audits. So there are a few cases in which Germany has been doing joint tax audits also with countries outside the European Union. And what are the advantages of joint tax audits? These procedures are time-saving, as mentioned. They reduce legal uncertainty because they avoid the creation of double taxation already during the tax audit process. So both tax authorities are on the table, and they need to come to a joint conclusion on the tax audit, and a final assessment will then be made in which the two tax authorities should agree upon their interpretation of the facts. So this is reducing costs, of course, on the end of the taxpayers, preventing disputes, so no mutual agreement procedure is necessary, and in the best case, even giving certainty for the future, because you can enter into so-called fast-track APAs on the German end. Let us take a short look on the experience in the next slide. So, as I've said, Germany has already quite an experience with 19 countries in the EU but also with the US, Norway, and Canada outside the EU. Some discussions also with Malaysia. So it is expanding. The German tax authorities would be open also to have joint tax audits with Japan. I think there we are only in very early discussion phases. So there are some procedural hurdles and, of course, language barriers which would need to be taken. And the practice report, which has been done after the first round of joint tax audits, was very positive. So I think lessons learned is that also taxpayers who experience this have had a very positive feedback because it saved time and resources. Language skills are sometimes a problem. The procedure is not so clear often, so that there needs to be kind of a discussion between the tax authorities on how to do the tax audit. So this is something which needs to be, let's say, taken up by the legislators going forward. But from an overall perspective, a very, very interesting and positive procedure. With that, I would hand over to Joe to do the summary.
Thank you, Marcus. So, please go to the next slide. では、ここからまた2ページに向けて全ページのキーポイントを日本語で解説させていただきます。こちらのスライドでは近年増加しつつある共同税務調査の概要について解説しております。まず一つ目の矢羽ですね。従来からあった同時税務調査の制度との大きな違いとしては、各国で個別に調査を行うというわけではなく、多国間の調査チームがですね、一つの調査チームに組成されて、合同で調査を行っていくというところが特徴として挙げられます。次に2つ目の矢羽、法的要件のところなんですけれども、共同税務調査について2011年、EU 指令が出されておりまして、EU 加盟国同士ではですね、基本的に実施が可能というところになっております。でその他の場合でもですね、国家間で行政支援協定が存在するような場合には実施が可能というところになります。で最後の3つ目の矢羽ですね、共同税務調査はですね、納税者にとって事務負担の面で大きなメリットがあるというところで考えられています。というのも、相互協議手続きの回避だったり、また事前確認制度の持続化 にするというところが期待されておりまして、資料の提出というところも一度で済むというところの、メリットもございますので、調査対応時間やコストの節約、法的安定性、確実性の早期確保といった観点からも、大きな便益をもたらす調査アプローチであるということが言えるかと思います。Please go next slide. はい。では、ここのスライドでは、共同税務調査のドイツにおける実施状況について、解説しております。現在、EU 内では19カ国、EU 外ではですね、アメリカ、ノルウェー、カナダと実施しているという状況になります。まだ日本との間ではですね、共同税務調査の実施事例はないということなのですけれども、ドイツ税務当局はですね、共同税務調査の実施に、オープンな姿勢をとっているということです。で、こちらのスライドの下段ではですね、オランダと実施した試験的な共同税務調査に関わる結果報告レポートの顛末を記載しております。大事な結果としましては、こちらの中腹のところなんですけども、12ヶ月以内に早期に、調査が完了合意に至り、共同税務調査の結果はですね、その後オランダにおけるユニラテラル APA の実施につながったという点になります。また、納税者からのフィードバックとして、総合協議手続きを回避できた、ですね、共同税務調査の実施はですね、非常にポジティブに、受け止められたということでした。はい。で、総括するとですね、共同税務調査はですね、納税者様に、メリットが非常に大きい制度ということが言えますので、今後、各国との実施例が増えていくということが想定されるかと思います。はい。駆け足になりましたが、ドイツ移転科学チームの、発表は、一旦ここまでとなります。続きまして、日本移転科学チームからの説明にさせていただければと思います。So our presentation from German transfer pricing team has been ended. So now hand over to Japan transfer pricing team, Mai-san.
Thank you very much, Kumagai-san. Can you please move the slides to the next one? The next one, please. So from here on, I would like to briefly go over the recent trends and developments of tax audits in Japan. On the right-hand side, we have shown the historical number of TP adjustment cases and TP adjustment amounts in Japan. You can see that in the early 2000s, the number of cases were lower, while the adjustment amounts were quite large. In more recent years, the adjustment amount per case became lower, but the number of cases have increased. Another point to note here would be the COVID years. In 2020 and 2021, the number of cases has dropped significantly, which is when COVID kicked in. But in recent years, the number of audits are picking up to close to pre-COVID years. Another thing to note is the COVID-affected years for taxpayers can still be subject to audit because statute of limitations in Japan is 7 years. When a tax audit is initiated in Japan, transfer pricing is usually covered within the general corporate tax audit. And the first thing that the auditors ask would be the local file. Then they usually go through the local file and pick out subsidiaries that are making high profits outside of Japan. So Germany might not be the case for many Japanese headquartered companies. And the focus may be more on the Asian subsidiaries. So we also wanted to highlight a few common topics that we are seeing in Japan. One topic is financial transactions, such as intercompany loan, cash pooling, and so on. This is because the administrative guidelines was updated in 2022 in Japan, and the auditors are now very keen to request information around financial transactions topic. And another point is what I just mentioned earlier, higher profits in local entities generally catch attention and can trigger scrutiny to individual transactions, one of which could be the intragroup services fees. So I would say those are quite similar to the German tax audits. We're also seeing particular industries with relatively more focus, such as pharma, medical equipment, etc. And last point may not be applicable to Japanese headquartered companies, but in case when the Japanese company becomes a tested party under a TNMM analysis, then the benchmark analysis should use Japanese companies instead of APAC region companies. So those were some of the trends we see in Japan tax audits. I am moving directly to the Japanese summary. So if we can move to the next slide. はい、ここからは日本語で日本における税務調査の最近の動向について、簡単にご説明させていただきます。スライド右側では移転価格構成の件数と移転価格構成金額を示しております。で、こちらご覧いただきますと、2000年頃初頭はですね、件数が比較的少ない中、1件あたりの構成額が多額であったということがわかります。最近ではどちらかというと、1件あたりの構成額というのは少なくなったんですけれども、件数自体は増加傾向にあるというところがございます。はい、あとは、新型コロナウイルスが流行した2020年と2021年なんですけれども、件数大幅に減少したんですけれども、現在はコロナ以前の水準まで、もうちょっとで回復するという状況になっております。で、1点ご注意いただきたいのが、日本の移転価格税制の実行は7年でありますので、コロナの影響を受けた年度についても、まだ調査の対象となり得るという点がございます。で、一般的に日本で税務調査が開始されますと、移転価格調査というのは一般法人税の一環として行われます。で、調査の際にまず最初に聞かれる、提出を求められるのがローカルファイルというものになっていまして、大体最初にローカルファイルを見て、海外で高い利益を上げているような子会社があれば、それが構成のトリガーになるというのが非常によく見られるパターンとなっています。はい。で、日本の税務調査の最近の、ホットトピックというのをいくつかリストアップしておりまして、一つ目が、グループ9ローンですとか、キャッシュプーリングといった金融取引になっています。これはですね、2022年に移転価格事務運営要領というものが改定されまして、金融取引についても明文化されましたので、最近の調査ではしっかりと金融取引についても情報を要求されるようになったということがございます。で、もう一つのポイントは、先ほど申し上げたように、現地法人の高収益ですね。現地で利益が出ていると、やはりとても注目されますし、それがきっかけとなって、個々の取引が精査されるというような流れがよく見られます。で、その一つが次のブレッドポイントのグループ内役務提供の否認といったところでもあります。はい。他にも一部の業界、製薬ですとか医療機器といった業界が比較的注目されているかなというところです。で、最後のポイントは、日系企業さんにはあまり当てはまらないかもしれないんですけれども、TNMM というよく使われる移転価格の手法の中で、日本法人が検証対象となる場合、ベンチマーク分析で、アジアパシフィック地域ではなく、日本の企業を使用するというところが、日本の当局の特徴になりますので、もしそういった分析をされる場合はご注意ください。はい。少し駆け足になってしまいましたが、以上で日本語でのサマリーを終了いたします。Okay, so Andres, back to you.
Thank you, May, for that insight. That was really helpful. Well, with this, we are coming to the end of our Series 1 webcast. So as a key takeaway, we have seen that transfer pricing audits are considerably increasing in Germany, regardless of the size and also of the transactions. And as we have seen, this in most cases can lead to a double taxation when there's an adjustment in Germany. Unfortunately, a corresponding adjustment in Japan is only possible through a mutual agreement procedure. Therefore, taxpayers should consider other controversy management tools to avoid this double taxation, like a mutual agreement procedure, which we'll be discussing in our second series, including also advanced pricing agreements. And although most of the experience has been with other EU countries, joint tax audit is also an important tool to consider. So we would like to remind you before we go of our upcoming transfer pricing webcasts. As we have mentioned, the Series 2 webcast is upcoming in May. So that will be on the 17th of May, for which you will be receiving a separate invitation. Similarly, there you can see in your screen other webcasts that our transfer pricing team here in Germany is offering on different matters. So if you're interested in those, please also feel free to sign up once you receive the specific invite. With that, I would like to thank all our panelists for their participation, and a big thank you to all our audience for listening in Germany and in Japan. Thank you very much for joining our webcast, and we look forward in seeing you in the Series 2 webcast next month. Have a good rest of the day. Bye-bye.